Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, checking in on the MJ sectors here, both Canadian and US. We got weed, APH, ACB, EMC, MJN, OWCP, MGW, GRNH, and CBIS. So we had a fairly uneventful end of the week, and how we have been playing out the past 2 weeks. We had the bearish reaction to the comments by the press secretary of the U.S. and the Attorney General of the U.S. In my opinion, we're not going to see any kind of crackdown in the U.S. That would just be an absolute nightmare by the administration if they were going to take that on. So I think that was all overblown. I think the headlines were blown out of proportion. So we saw a dump, and then we saw a nice oversold bounce on that dump, and the oversold bounce occurred on those shorter term time frames. There was a lot of volume on the dump. There was a lot of volume on the bounce. But then things really are leveling out, and we're reaching an equilibrium where we see volume drop off. We see the trading range drop off as things tighten after a big time move. So here on WEED, we had that dump. We had the bulls buying the dip, some nice follow through to the upside on that oversold bounce. And now you can see the past 3 days, we're getting very tight. And look at the volume. Each day, it's just continually dropping off, dropping off, dropping off. And we're going to see a break in this tight range, and it's going to be accompanied by a spike in volume. So as of right now, the bulls want to maintain this support of 1112. Going forward for the midterm for the next couple of weeks, this is an absolute must-hold level if the bulls want to stay strong here. And at this point, we do have what appears to be a potential bull flag pattern playing out. And let's draw it here and see how it looks. Bull flag pattern is when you have a parallel support and resistance line on consolidation following a breakout. So here's our breakout. That's the flag pole. And then you have the parallel support and resistance levels, and that's a pretty good channel there. So I'm making sure no candlesticks close above my downtrend resistance line. I'm making sure no candlesticks close below my downtrend support line. That's a nice bull flag pattern, and this would be your flagpole. So that's why they call it a flag. You can see the general shape there. So bulls don't want to see a close below this level. Bulls want to see a breakout and a close above that resistance. And the key levels that we're looking at in the short term from the past 3 trading days, support is the low that we hit those 3 days, and that's down at 1169. And in terms of resistance, I'm looking at 1217 and then 1248. Bulls would love to break 1248 and break this little lower high pattern. You can see we topped out at 1330, lower high at 1288, lower high at 1248. So the bulls would love to break 1248 early this coming week, and make our way to the top of this channel. We can see the weekly time frame is getting tight as well with an inside candlestick. The range of this week fitting completely within the range of last week. So that shows a tightening channel is forming, and it's coming after this breakout. So we had the breakout, a bearish reversal doji, consolidation is ongoing, and it's normal healthy consolidation in a bull flag pattern. So that is a good sign for the bulls, because a bull flag pattern usually does indicate continuation. So we'll see if we get that bull break for continuation, but we're going to have to see some bullish action. As you can see, since the bad news, we've only had one real solid bullish day. We have seen some decent upside from that dump, but you can see it's mostly red days mixed in there, only one strong close. So the bulls need to show up this coming week, and we'll be watching weed as one of the sector leaders, but it is no longer the strongest chart in terms of the major licensed producers. APH by far is. So you can see just the very clear difference. APH hit a higher high back on Tuesday, and weed on Tuesday, we're hitting lower lows. So APH, very strong chart. It is the lead strongest chart on the LPs, and that's the bigger name LPs that I'm referring to. And so we had a strong close here today, nice increase in bull volume. You can see we had that same tightening range, smaller and smaller ranges, bull break today, and we're just looking at 696 and the high of today, 688. And there's also a resistance from back in November of 699. So 688, 696, 699 right there with $7 psychological. And going forward, we have a little bit of a double low here, 651 and 650. So the bulls really want to hold 650 all week this coming week to maintain the higher low pattern. And you can see the bulls bought this dip a lot more aggressively, hitting to the higher high just 2 days after that dip. So the APH bulls are looking great. Look at this weekly upper Bollinger Band resistance. 3 weeks in a row, it has marked the high of the week. It's at 697 currently. We have to update that next week. It's going to be in the low $7 range, and it's going to require a high volume breakout and a close above that level for the bulls to get past it. Otherwise, it is going to be keeping a cap on the price, so to speak, but it is ascending fairly rapidly. So that's not a major concern for the bulls. This is just a really strong chart, and we're looking up at that 696 recent high that we hit. 779 is the highest price we have hit on that run up in November, and the bulls are strong. You can see that really strong close on the weekly time frame. ACB seeing a little bit more weakness. Same thing with weed. Not bearish by any means, but definitely not as strong as APH. So the range we're watching right now, we have a low the past 2 days of 252. That's our first support level. And then we have a double low here of 246 and 247. So 252, ideal for the bulls to hold. If it breaks, 246 is a must hold in my opinion. Otherwise, we're going to lose that key level. And because we had a very strong bull break here from the 225 range up to 246, it would be fairly easy to fall back down pretty significantly if we were to lose 246. So in terms of resistance, we did close at the high of the day, so the bulls do have some momentum heading into next week. So resistance is going to be up at 259, then I'm looking at 268, and then we're looking up at that recent high of 284. So the bulls are still holding on, but they want to see some more upside and follow through from the strong close this week. And the weekly time frame, same thing, inside candlestick, tightening range compared to last week, but the bulls still do have a nice little higher low, higher high pattern on the weekly time frame since we hit that low in December. So I would say right now, out of the 3 names that I've covered so far, APH is the strongest daily chart. We've got ACB as the second strongest daily chart, and WEED is the third strongest of the 3. And I put ACB above WEED just because it doesn't have as clear of a lower high and lower low pattern on that pullback. This lower low right here is why I would put it third. As you can see, ACB had that low and is still forming higher lows. Didn't get that lower low yet. EMC had a clear bear break, and we've been watching 350 support and making some bounce plays off of that level multiple times. But as soon as 350 broke, that was a bullish or an exit signal for the bulls. Certainly would want to be out of that position. We knew a lot of people with stop losses at 348 to get stopped out and miss this downside move, because when you have people using technical analysis, whether or not you believe in it doesn't matter, because there are hundreds, thousands, many thousands of people that do believe in it. So when they see 350 break, they are all exiting. And you can see it gets magnified to the downside. When 350 broke, dropped down to 338, then down to 318. So here we are losing almost 10%. We're losing about 8% in 2 days once that support breaks. And that has absolutely nothing to do with the company. The company is losing 8% of its market cap completely due to technical analysis, in my opinion. So that support level broke. We now have 350 as tough resistance. Any bounce attempt we're going to see, that is going to be the first major resistance that we look at. And the bulls are trying to build a double bottom here as well. We've got 318, 319, and 318 holding the past 3 days, but we closed at the low of the day today right above those levels. So it's not convincing support at this level. We do know a couple people, we have a couple members making another bull entry down here, and it's another clear stop loss level. You put your stop at 316 and you get stopped out. If it breaks, you don't risk a whole lot. So people making entries at 320 with a stop loss of 316, and you can have 10,000 shares and you would be risking $400 on a $32,000 position. So certainly not a ton of risk, and we'll see if the bulls can hold that level. But if we lose 318, I'm looking down at not a ton of support established down here. I'm looking at 314, 3 psychological, and then 287. And in terms of resistance, the short-term resistance, 335, and then up to 350. Weekly time frame for EMC, pretty scary for the bulls. For the bulls, we've got a lower high and a lower low. Close at the low the last 2 weeks, increase in bear volume. So we need a new support established because we do not have one at this point. without a ton of trading history here, you can see very clearly that we're seeing a lot of weakness the past 6-7 weeks. And we need to find a new support level, and there's not a lot of previous price history back here to be going off of in terms of support. MJN is also one of the very strong charts here, and I don't consider it in terms of just market cap size. I don't group it in with the major LPs, but MJN here, we have resistance of 343. We had a double top, and we broke that today. It is a bearish doji. It's following a nice strong uptrend the past 5 days. So if we see a red day, we will look for normal healthy consolidation, as that does show indecision, and indecision favors the bears because we have been in control by the bulls up to this point. But it's a nice strong break of that 343, and strong is the wrong word because it was not a strong break. It was a weak break. But we did break that double top, which is a good way to end the week rather than having that double top looming over the bulls' heads heading into this next week. So if we do consolidate, support is 335, 320, and 308. And our resistance is 345. And look at that weekly chart. We had a bearish reversal candlestick last week. Bulls are negating it. We're staying above the upper Bollinger Band in breakout mode. Update that upper Bollinger Band at the start of next week. The bulls want to continue to hold that level and show a lot of strength. The fact that we're at blue sky breakout does make this a very favorable chart for the bulls. Volume dropping off significantly, so we're going to have to keep an eye on that as well. But if we were to see a break of the low of today on Monday, that would indicate that some normal healthy consolidation is coming. OWCP, I've given my fundamental opinion on OWCP after reading the financials. Enough at this point that you're certainly aware of my opinion, and I'm not going to say that this pullback is because of the bearish financials and the fact that they don't have profit and they're selling shares in terms of keeping the lights on, and that's definitely not the reason. The reason is because of the, well, it could be part of the reason, but the main reason is we saw a multiple 100% move to the upside, and you're going to consolidate very significantly. And those that are new to this sector and those that are long this name and bullish and love the story, that's completely fine. I've given my warning, and if you are still keeping those risks and you've done your due diligence, that's great. And you just, these situations that you will become very familiar with where you're going to find yourself saying, nope, I'm sticking to my conviction. I'm holding here. I'm not selling. And then you find yourself saying, oh man, if I sold, I could have reloaded twice as many shares for the same price. Why didn't I lock in that profit? And the answer is greed. Greed is why you didn't lock in that profit, and also not knowing how to trade. And that can change. You can learn how to trade. You can learn how to be a bit more nimble in terms of exiting positions, locking in profit, and then reloading on dips with more shares if you really like the story fundamentally of the company. So here we go from 305 down to 106 in 4 days. That is a 60% drop. So the signals of consolidation, the big red flag was the inside candlestick here. So we had an upper wick showing profit taking. We had the lower high hit, and that was at 305. We had an inside candlestick, so support was 245 and 251. And then the next day here on Wednesday, we broke those levels on an increase in bear volume. That's all that the bulls need to see in terms of an exit signal for the short term because of how significant we have run up. Now we're starting to see some big bear volume, lock in those gains, and worst case scenario, you leave a little bit of money on the table, but better safe than sorry. So the key support here breaking today was 145, and to be honest, I'm surprised that the bulls didn't put up more of a battle here. We had 145, 145, and 151 supports. We fell right through those levels on a ton of bear volume. The one good thing is the bulls did rally a bit here and close above this middle Bollinger Band of 129. Keep an eye on that level on the daily time frame, and our new support is 106, just above $1 psychological. So the middle Bollinger Band is holding. $1 psychological support needs to hold. There is a gap down here at 94 cents. If we lose this daily middle Bollinger Band early this coming week, we will be keeping an eye on this gap for the potential to fill it, but we can also see from here, if this middle Bollinger Band holds, we will be looking for a fairly decent move to the upside. So in this, it's a very high risk name in terms of the volatility that we do see, but we do get scenarios where we get really overbought, or I should say oversold dumps. And we had the RSI when we were down at 106 today. The RSI on the 5-minute time frame was really low. It was down in the teens. And when it's down in the teens, you know that a bounce is coming in the short-term future. So we're going to have to watch how the price reacts to this middle Bollinger Band on Monday. That's going to be very telling. It's going to be in the mid-130s. If the bulls can close above that level again on Monday, we'll look for a little bit of short-term upside. But as of right now, the bears are in control, and it's that volume that is standing out. You can see the bull volume to the upside was nice. The highest volume candlestick we saw was a lot of profit taking, and now the second highest volume candlestick we've seen was a dump. Some of that was the bulls buying the dip with the lower wick, but certainly more bear volume than bull volume today. The weekly time frame, losing the upper Bollinger Band support. You can see the low the past 2 weeks, 104 and 106. So the bulls really want to hold those levels. Otherwise, the gap to fill is at 94 cents. So keeping in mind the overall picture, this is still a very bullish chart. It's just the fact that we gave back 60% in 4 days, which is why when you see such a strong move to the upside in such a short amount of time, you always want to ideally be having a stop loss level that is either a trailing stop or you're walking it up day by day with the price to lock it in, and you can always reload lower. There's very few scenarios where it's going to completely run away from you after a significant move to the upside without substantial fundamental news to back up the price running away from you. And that obviously wasn't the case on OWCP recently. There was some nice bullish news, but not the kind of news that's going to make it go 500% and never come back. So we have 106 and 104 must hold supports. And if we do break those levels, 94 cents is our next target. But this chart is in control of the bulls on the weekly time frame long term, as long as 49 cents holds. As long as we form a higher low compared to 49 cents, the bulls remain in control. So keep that in mind. MGW, strong close here at 69 cents. It's time to start paying attention again. We're watching this very tight range. A break of 69 cents is the go signal. And we hit that level today, and the ask at that point was 300,000 shares, and the total volume on the day was 400,000. So we pretty much would have needed to see a 75% increase in the total volume of the day in the last hour of trading, which certainly is unlikely. There's not a lot of people buying that ask with the ask so big with 300,000 shares there. But it's worth watching because when those shares do break, the next target after 69, we're looking at 71, 72. There are still a bunch of resistances here, pretty much one by one, 74, 75. But the bulls will have that momentum, and you can see the nice volume and the nice close at the high of the day. We're going to be looking for that momentum on Monday. We want to be a little bit cautious. If we were to see a gap up open on Monday without breaking 69 cents, we would need to be cautious there because all those shares did not get bought, and all those shares are still in the market, and the seller might be looking to dump right after that gap up open if we were to open above 69 cents. But as of right now, keep an eye on a break of 69 cents, and if we can close above this upper Bollinger Band, which is going to be in the low 70s on Monday, break of 69 cents, close above the upper Bollinger Band, and we're going to be looking up at 75 and 78, and the bulls will have control. We're on the verge of a bullish MACD cross. We have been here before on the verge of a bullish MACD cross with a close up near the high of the day, and we didn't see that follow through, so we must break 69 cents. The weekly time frame, you can see how tight we're getting. We are still right on that middle Bollinger Band, and it's make or break here for the bulls. If we see a bear break, we're looking down at 60 cents, and we have support of 65 cents as well, but it's getting close here. Keep an eye for a bull break on MGW. There could be some nice upside. We'd be looking for a 10 to 20% gain in a short amount of time if that bull volume shows up. GRNH, inside candlestick 2 days in a row. The range is tightening. The 200-day moving average support is holding at 7.2. This is a fairly thinly traded name where we can have some wide spreads between the bid and the ask when the volume really starts coming in. But we can see the exponential resistances are containing the price. The 200-day moving average support is holding, and the bulls need to make a move back up towards 10 cents. I like watching GRNH here, and it's the weekly chart why I watch it. And it's reaching an equilibrium pattern where we have our high on the breakout, our low of consolidation, our lower high, and now our higher low at 0.066. Look at the 50-week moving average support. It held the dump on our low after the breakout, and now it's holding again 2 weeks in a row. Bullish reversal doji here needs to be confirmed. We need to see a move back up towards 9 cents to confirm this candlestick this week and to be looking to try and break this tightening pattern. But we will stay in this tightening pattern for a bunch of more weeks here. We can certainly stay within it for at least another month if the bulls do show up, because the range right now of this pattern is 6.6 support and 11.7 resistance. So a ton of space in between those levels, but you can see how it's getting tighter and tighter. Volume was high here on the breakout, and it's starting to taper off a little bit. So we're looking for the bulls to head back. 8.5 resistance, 9.34 next resistance after that. Keep an eye on the volume. Volume certainly shows up really quickly because it doesn't take a whole lot of volume. In terms of dollar volume, 1 million shares is a lot of daily volume here, or $1 million traded is a lot of dollar volume on GRNH. So it doesn't take a lot to get the needle moving, but it moves very quickly in both directions. We can see the dump on the Attorney General comments. We dropped all the way down to 6.6. And then we saw a really significant bounce. There was a 20% bounce to be had there. So there isn't a lot of volatility here, and it is pretty nice for day trading when that volume and volatility does come in. CBIS, bullish reversal candlestick, gap up open, and it was a gap and trap. High of the day was the open, and then we consolidated. The gap will fill down at 9.1. We dropped down to 9.2. New resistance is 9.9. Bears are in control of CBIS. The absolute must-hold level is 7.5. We bounced off of 7.72. As of right now, this is just a weak bounce attempt and another lower high. And why do I call it a weak bounce attempt? Well, look at the volume. That is not convincing volume compared to the bear volume that was preceding it. So we have our lower high being set, and we would, in order to break this lower high pattern, we would have to break 12 cents. So there's a lot of work to do for the bulls here. The weekly time frame did buy that dip. That's a nice long lower wick. Middle Bollinger Band still holding. It's all about 75 cents, or I should say 0.075. That's a must-hold level going forward, and we need to see a nice green week. This is a bullish reversal hammer after a couple weeks of consolidation, so we need a nice green week and a close over 10 cents next week, ideally, in order to be trying to confirm this bullish candlestick. So there are a couple bullish reversal candlesticks on the weekly time frame of some of these U.S. names. Need to see a green week to confirm it this coming week. So that's a whole lot to digest, but in terms of the most potential coming into this coming week, MGW above 69 cents is a clear leader in terms of potential. OWCP does have some nice oversold bounce opportunities. That oversold bounce from the low to the close was about 25+%. So there are day trading opportunities on a high volume volatile name like OWCP. You just need to be using a stop loss level. Last thing you want to do is be stuck holding the bag and then trying to rationalize in your head, oh, well, it's going to go up in a few weeks. We'll have more bullish action in the sector, blah, 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 making up reasons as to why you can hold on while you're in the red. That's a situation you never want to be in, and stop losses will prevent that every time. APH still the strongest chart, looking for continuation, and MJN strong as well, but this doji does show we could be in for a little bit of consolidation. So I appreciate you watching. I hope you have a great weekend. Best of luck to everybody out there, and I'll see you soon.